The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 2nd, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at these circumstances of these markets, what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, call on in. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow off about 150 points. She's trading at 18,256. S&P down 22 at 2148. NASDAQ Composite off 70 points. She's trading out at 5113. Russell 2000 down 19 points. The DAX closed off 186 points. The FTSE closed down 48. You've got gold up 12 bucks, silver up 15 cents, light sweet crude back 76 cents out here. Leading the charge here to the upside, you've got IDEX Labs up 13% or 12 bucks and change. Mallincourt Publications up 14%, about 10 bucks. Dun & Bradstreet up 6%, 8 bucks. Trex Company, or maybe it's T-Rex Company, that's up 13.5%, nearly $7 to the upside. To the downside, Priceline dollar-wise is leading the charge off about 2%, down 24 bucks. Chipotle down $11.5, that's nearly 3%. Mettler Toledo International down 2.5%. Or $10. So now, if we take a look at what the markets are doing, so you're off 150 points. What is it that we want to pay attention to? So let's go look at the levels here, because we certainly have retracement is underway. Is it more than a retracement? And let's take a look at some things that we want to be paying attention to. The first thing that we want to take notice of, let's come over here, take a look at the VIX index. If you're watching this on TigerTV, and I hope that you are, because you can get this streaming on your mobile device on anything it is that you're looking at, you're seeing my screen here that has 6 different panels when I take a look at my little tab for the VIX index. Now, the panel that I want you to focus on, there's 2 of them. The first one's going to be the lower left. I'll go ahead and explode it up on my screen out here. The reason that we're going to be paying attention to this is when we take a look at the cash index, cash VIX index up $1.70 right now. The very right-hand side of that screen, you'll see it's up 13.75%. What you want to see, or what you're looking for, is what is that one-day rate of change going to be at the end of the day, at the close? If it's greater than 10%, what you should anticipate is a bounce, at least in the futures market, maybe to follow through. So you should not be surprised if you were to come in tomorrow. If, in fact, let's assume that the market closes like where we're at here, or worse, poor, and you see a huge move in the VIX. The next thing that you're going to look at is where does the VIX close in relationship to its 50-day exponential moving average. Right now, that's priced at 1468. You are trading at 1416. So if you test 1468, maybe it doesn't even have to get up there. As long as it doesn't close above it, then you've got that one-day rate of change. Do not be surprised. So if you are, depending on what you're trading, if you're trading the futures market out here, just make sure that you are using stops and that you're focusing on this because the likelihood of a bounce when you have a one-day rate of change, it's in that 75 to 80% level. Doesn't tell us how far. You've got to use other patterns to pay attention to. So that's one of the items that you want to pay attention to. Item number 2 is going to be inside the NQ futures contract. And if we take a look at the daily, right now we can see it's trading out at 46.83. Again, if you're watching us on Tiger TV, you're going to see 4 different panels. You've got the ES Mini, S&P futures on the left, NASDAQ futures on the right, the Dow futures on the lower left, and you've got the Russell 2000. 10-minute delay there is on my lower right. Now, in the case of the ES Mini, we're going to look at both the ES Mini and the NQ out here. You can see that the ES Mini is headed down to a potential level of support. It happens to be the weekly point of control. So 2138, 2138.50 to be exact. We are trading at 2141.75 right now. So watch that level. Now, what happens if price moves below there? Then that opens up the door for 2099 eventually. But what the ES Mini is doing right now on its daily chart is moving back into a weekly profile that began yesterday. So it's a brand new profile, and this is a level where both buyers and sellers are most comfortable with regard to price out here. So that's on the ES Mini. In the case of the NQ, it's got further to go before it would get down to a level of support, that being a brand new TAS market profile that formed today. That price point is 46.42, 46.41.68 to be exact. So there are 2 levels here that you're watching for because the NQ has been the one that has been the strength inside the market. It really needs to close below that daily profile, 46.41.68, in order for this market to really get some momentum to the downside out here. So those are a couple levels of support. The VIX index and where it's trading at is important. And why are we taking a look at these levels of support out here? Well, it is the Dow, which is the lower left-hand panel. We can see that that is below daily and weekly profiles out here. It's been the weak link all along. And if we go take a look at the weak link out here, I'm going to pull up the 30-minute chart for you. Let me do this first. Let me get rid of the A to B equals CD pattern. From the high out here, now the high that I'm looking at is at about 2:30 in the morning. This is on August 1st, so this is yesterday. This doesn't take us all the way back. Well, that screen didn't look very good. I'm taking us back to yesterday, and when I take a look at the yesterday's high out here, well, it was really 2:30 in the morning, so yeah, it was yesterday. What we can see here is we're in wave number 6 to the downside, with wave number 7 likely to take place. Maybe that's going to take place by 4:15 or so. I don't know. But there's also an A to B equals CD to the downside that we want to pay attention to. Again, this is the intraday chart. So to put this together, excuse me for one moment. In putting this together from the intraday standpoint of taking a look at that VIX index, this says to me that the Dow futures want to head to the next level is 18,158. You're trading at 18,183. So you've got about 25 more points to the downside before it makes that 1 to 1.272 A to B equals CD to the downside. Now, I wish I were with you at 4:15 to give you some numbers to pay attention to going into the close. I don't have those. Where's a level of resistance on a bounce? Right now, I'd have to say it's 18,225, but that number is not likely. It's going to change coming into the contract closeout here for the afternoon. So that's inside the Dow. We've got the same pattern that is forming out here inside of the ES Mini. So we know the ES Mini is headed towards a level of support. Let's not get too carried away. Here's your A to B equals CD to the downside. Starting in essence with the similar or same swing point, 2:30 in the morning yesterday, you can see that it's already down to the 1 to 1.618 A to B equals CD. So it's actually the ES Mini that has gotten a little bit weaker now with regard to the lightning bolt pattern versus the Dow. And we're taking a look at 30-minute contracts out here. We can also see, let me just hit my update button. I'll get back to you as soon as we get back from this break. This is Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Sorry about that, folks. I wasn't really paying attention to my clock, which is a little bit off ever since Windows downloaded Windows 10 to my system. So I've been having to make some tweaks here. In any event, I should pay attention to the clock. That way I know when I'm going into break out there and don't have that abrupt ending. Now, we were taking a look at the ES Mini, the 30-minute chart out here. And so there's a couple of patterns that are setting up, potentially setting up as we speak. Number one, we can see a clear A to B equals CD to the downside. Now, we know the price will continue going lower until the bulls show up. How will we know if the bulls show up? The only way we'll know is by understanding our Japanese candlesticks, which is going to be a course that I'm teaching all subscribers coming next Wednesday, as a matter of fact. Now, folks, if you are not familiar with Japanese candlesticks, and this is going to be the best investment that you could make in yourself, because I promise you that what I share with you in that 1 hour will condense decades worth of information into that 1 hour and will have you be focused on exactly what it is you need to know. We'll get rid of all the minutia and the noise out here, and I'll teach you how to utilize Japanese candlesticks that you'll be able to apply for a lifetime. Now, the easy way to do that, go over to the homepage of TFN.com, sign up for my newsletter service, which in this case here, it's normally $149. The good folks here at TFNN have taken $100 off of that. So you're going to get the course, which is going to be available on your on your homepage for 30 days, plus the newsletter service for 30 days out there as well, all for $49. So come on over to the homepage of TFNN.com. One of the things we're looking for here right now on the 30-minute chart is we are noticing how price is moving lower, doing it with less relative strength out there. That's that little black diagonal line that shows up on my screen. So we know we've got wave counts from yesterday morning at 2:30, and we are in wave number 6. Sometimes we'll get to 7, sometimes we won't. Sometimes you do, sometimes you don't. But we're watching for that. We see we've got price moving lower, doing it less relative energy, and we are now in the ES Mini E-mini at the 1 to 1.618, A to B equals CD. So what do? Does that say you get out of your short position? No. It says that you adjust your stops. Where would you adjust your stop to? Right now, if you were utilizing a 30-minute chart for your trading, I'd say you would adjust it to above 21.49, somewhere right around there. In fact, I would say above 21.52, because that happens to be the current TAS market profile that is out there. If you see price get above that, then we've got a bounce that is underway, a bounce that, where could it take us to? You'd start taking a look at retracement levels of this A to B equals CD to the downside. But right now, this pattern does not have to unfold. That's why what you want to do is just be patient to understand the patterns that are present in the marketplace so that you can anticipate what the market is likely going to do out there. If the patterns never unfold, then you don't have to worry about it. But you're always anticipating what the market's next move is going to be. That's what we're doing. We take a look at these 30-minute charts out here. So you've got the 30-minute ES, you've got the 30-minute Dow chart that you want to be focused on. Inside the NQ, so here we're going to take a look at two scenarios. First scenario is that the market just continues to just get trashed going into 4 o'clock today. Inside the NQ, as we talked about, you're going to be paying attention to 46.41. What happens if the market doesn't trash? What happens if during this show, during David's show, during Tom's show, all of a sudden we see that price was stretched, wasn't doing it with enough energy to the downside, and you see a nice bounce coming into the close? What's the level you're going to be watching? Well, inside of the NQ, the price point that I would want to be watching is 4,700. Right now, if you're watching this on my screen, watching us on Tiger TV, you'll see a red line on my screen. You'll see a little red box over to the right-hand side. That is referring to the oscillator unchanged line. That tells us when the price oscillator is turned up or down. Right now, it is turned down. But this is an end of day since we're looking at a daily chart out here. Closing above 4,700, we'll call it 4,700 even Steven, even though it says 4,700.22 on my chart. That would say not so fast. Yeah, we have a bearish reversal signal. There's no question about that. That is because we had such a narrow traded range yesterday, as we've had in most of the indices for the last 7, 8, 9, 10, 11 sessions out here. But inside the NQ, which has been powering its way higher out here, it looks like that's going to be a bearish engulfing no matter what. But you want to be watching and paying attention to 4,700. When you close below 4,700, then we'd have what we'll call synergy in the markets. Now, speaking of synergy in the markets, we finally have things, or what it seems to be, we finally have things back on track. You're going to say, what the heck kind of track are you talking about, Steve-O? I'm talking about this track. If you watch us on Tiger TV, I know I say that fairly often, but I want to make sure that that you are watching us on Tiger TV because of all the great things that you get to see from each of the hosts out here. Now what we're going to do is, if you're watching us, which I'm sure that you are, because I've said it enough times, I'm going to not say it again. I'm going to try to not say it again. You're looking at a screen that has 5 panels. Why 5 panels? Well, because these are really the elements that help us to understand, with regard to the stock market, what it's going to do, when things are most bearish, when things are most bullish. And that's when we have alignment of items that correlate with each other really well. The left-hand panel on my screen is the 10-minute NQ. The panel next to that is the ES Mini. So we've got the stock market on the left-hand side out here. We can see the synergy certainly with both of them moving lower out here. You can see market profiles that are out there for a 10-minute chart. I'll just go ahead and update it, make sure that they're both updated correctly. And that's the red little boxes or numbers that you're seeing. I've got both 10-minute as well as 30-minute. Those, the red, are probably the 30-minute charts out there. In any event, you then have in panel number 3, dead set right in the center, is light sweet crude. Now, both you and I know that for months, other than the past several weeks, we haven't seen that correlation between light sweet crude and the market. Well, if you take a look at the NQ, the ES, and the light sweet crude contract right now, you can see, and you can clearly see, that things are back in sync. And so at least on a 10-minute basis, we know that things are in sync. Now you go one panel, so when light sweet crude is moving lower, that ought to be putting pressure on the ES Mini and on the NQ, on the stock market itself. Now go to panel number 4. Panel number 4 happens to be the 30-year Treasury bond. Now, I don't have it inverted. I could invert it for you so that we could really see things, but then I'd have to explain that it's inverted. Instead, it's just the normal 30-year Treasury bond. And here's what you want to know. When it's moving higher, okay, it would be in synergy. You say, okay, money is coming out of the market to go into bonds, or however it is you want to look at it. The reality is when bonds are moving higher and the market is moving lower, now you've got synergy. Now, with regard to bonds moving higher, what do they need in order to fuel its fire? They need just one thing. They need the Japanese yen to move higher. So what we have going on inside the markets right now on a 10-minute basis, and it's been this way here for several hours, since 10 o'clock this morning, maybe a little bit earlier than that, but pretty much right around 10 o'clock this morning. The first move actually came from the Japanese yen, and that was at about, 7 o'clock in the morning. But everything right now, as we take a look at it, the Japanese yen moves higher, bonds move higher. It is just as simple as that. In fact, the Japanese yen moves higher right now. Gold and silver move higher. Are gold and silver trading higher? The answer is yes. What is it that's causing that? It's a currency issue. Right? Currencies rule the world. We're just trying to understand who's ruling what so that we know who's the dog, who's the tail out here. And you've got everything that is in sync. So is this chart here that I'm taking a look at muy importante? More important than any other chart that I probably could show you today out here. We start to see one change, like right now, bonds are starting to pull back a bit. We start to see the Japanese yen pull back a bit. If we see light sweet crude moving higher, it's going to give us a lot of info. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Dow's off 137. S&P is down 20 points out here. So I've given you the keys to the kingdom, at least the way that I see it, the correlations that are out there. And when those correlations are in sync, when they are syncing, it's giving you especially if you're an intraday trader out here, it's giving you all the information you need to know because things have been out of sync. So if you're wondering why has the market just really been moving sideways, it's because things have been out of sync out here. You've had light sweet crude moving lower, as you know. Let's just take a look at it. And you've had bonds moving lower. So those things weren't correlating really well. Just with regard to its daily chart patterns out here. Right now, you've got light sweet crude at 39.38. That's off about 68 cents. And as we take a look at it, here's what we know. First, let me get rid of, well, I don't want to get rid of too many things, but we'll turn some things on and off. Let's turn them all off as we speak right now. So as we take a look at light sweet crude, one of the things that we know, and this is a place where this is where you would target price to head down to, is a swing point. That's where your eyes should always first go when you're taking a look at your price objectives. So if you were looking at a price objective from the high out here on June 9th as it was forming that seventh wave move to the upside, your initial price objective would be right here, right where we're trading right now, which is into the April 5th swing point. Now, I don't have the volume from back there, so I won't worry about volume just yet. What we do know, though, is price is trading inside that swing point, and that says more likely than not, if you see it close below 39.66, price is likely to go test 38.67. If it gets below 38.67, it'll head down to the next swing point, and the next swing point is all the way back at February the 11th. So that's one level to be paying attention to. We also want to take a look at retracement areas, and these are retracements from the low back here on January 20th, all the way up to the high out here that formed on June the 9th. We can also see that price is below the 0.618 retracement level. So if it doesn't hold that swing from April 5th, says 37.10 becomes the next potential resting spot out here. If the bars are getting wider, if volume is picking up as it's going down there, then that brings into play that 100% move of a move headed down to 32.85. And at this stage here, if I go ahead and put up the daily contract for light sweet crude, the September contract, you're seeing that you're only in wave number 4 to the downside. What does light sweet crude need to do to get bullish? Should it turn around? Should it stop at that swing point? Well, just simply a counter trend rally would take it to about $42. But if you get above $42, then we may be seeing a change in trend to the upside inside of light sweet crude, but it's got to close above $42, 42.01 to be specific. Let's go to Steve in Nashua. Steve, thanks for calling. Thanks for holding. How are you doing this afternoon?
Yeah, hi, Steve. Good. Thanks for taking the call.
My pleasure. And you want to take a look at the GDX. Tell me.
Actually, last week we spoke. It was the contract, Steve. I think it was GCQ6 we were looking at a week ago.
Got it. Okay.
Can we look at that one instead? Is that the same contract?
Yeah, it is. It's trading up at 13.71. It's up $12 as we speak right now. Okay, so I've got the contract up on my screen and fire away.
I'm looking at from last December on up to today, and I see the December lows, and then you had the early March peak, and then the sideways, and then up again here, right?
Yeah. Yep.
And back a week or so, we were talking about the downside, what might have been 13.15, 12.82, 12.53, and maybe 11.76.
Yep.
Obviously, the world went topsy-turvy, and it's going the other way now, of course. Are those numbers still in play long-term, or?
Well, so it's a great question. So when we take a look at some of those numbers that we looked at, we were looking at our TAS market profiles, and one of the things that you and I knew was that this area of 13. Now we've changed contracts, so the numbers have changed just slightly because it used to be 13, 15, 10, but in rolling over to the December contract, they have changed just slightly. But it basically becomes the same support zone, just the contracts are priced just a tad differently. Sure. So the levels here to be looking for, which is a really significant level of support for this contract, is 13.2180. So between 13.2180 and 13.3120 are the significant levels of support inside the December gold contract. Right now we're trading at 13.72, and at 13.72 it is above the weekly TAS market profile, which is 1366. So, Steve, if this closes above 1366, that suggests to me that we see another test of the high out here, and that high coming in on July 11th up at that 1383 level. Now, 1384.40 happens to be the top of its daily box, its TAS box. And what I'm going to do here is I'm going to first turn off price. And then I'm going to come back to my boxes. I'm going to turn off the weekly boxes because the daily box that is formed up here, what I want you to notice is this little dash line, which is referred to as the point of control. And figure that is a large congestion area where both buyers and sellers are just hanging out. When that's closer to the resistance line, which it is right now, this tells us that the snipers are really hanging out at 1384.40. No idea whether they can take out all of the bulls or not, but this becomes a real significant resistance zone, which then says, hey, if you can close above 1384.40, that would be very, very bullish out here. But expect that to be the next level of resistance. With regard to the additional downside, let's say if price finds resistance and starts to trade back, then the levels you're going to be looking at are 1363 and then that 1321 level. Any move below 1321 would bring the 1295 area into play. But 1295 is not going to take place not until we see its price oscillator turn to the downside, which it turned to the upside back here on August the 1st. And once it got above that, there's nothing more bullish than a rising price oscillator above zero. Let me open up the bottom portion of my screen. That's what we have. And that says you go and you test that brand new resistance zone of that TAS daily profile. And the other thing that you want to focus on and pay attention to is the Japanese yen. So, Steve, we touched on that in the last break when I put together 10-minute charts and put them side by side. It was the Japanese yen, which is the top portion of my screen out here, that gave the signal that, okay, gold was ready to start moving to the upside back on July 29th because it broke right above its oscillator unchanged line. So the question becomes, what is that currency pair going to do? At least that's how I see it. Now, what questions did I not answer for you, or what new questions do you?
First of all, from December to March looks like a A to B, and then sideways B to C, and it has the general look of an ABC.
Sure. So you're right. You're right about that. Now, what you need to do for the A to B equals CD, Steve, is you want to go ahead and take a look at May 2nd. Now, the reason I say that you want to look at May 2nd as your B point is because on the retracement down to on May 31st, that low actually took out the lows that you were looking at in March 28th. So the proper A to B equals CD pattern would be the lows you were looking at back in December. I'm using December 17th. So on this contract, it's priced out at 1,052. To 1311 is your B point. To the retracement, about a 40% retracement into May 30th, May 31st, and your 1 A to B equals CD takes you to 1465.90. I see I've taken us into the next break. Do you want to hold so that you can, ask me some other questions?
That pretty much did it. My only last thing was, and maybe you can say it when you come back, is does the dollar affect that whole thing? If the dollar is up and down, I know it's an inverse.
Absolutely.
Okay,
It is the dollar that does affect it is the Japanese yen. That's Steve in Nashua.
Okay.
We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go and answer Steve's question before we get in off the phone as we were going into break. He asked the question, was really asking about the correlation between the U.S. dollar index, which is a basket of 6 currencies. So that basket, the euro, is the primary currency representing nearly 58% of the weighting inside of that. The Japanese yen happens to be the second largest weighting inside the U.S. dollar index at 13.6. Then you've got the Great British Pound at 11.9, the Canadian dollar, the loonie at 9%, the Swedish krona at 4, and a Swiss franc to cap it off at about 3.6. So that is what makes up the U.S. dollar index. Now, the top panel of my chart, Steve, and I know he's not on the phone, but I'm speaking to him and you and everybody out there, is I've gone ahead and used a line chart. Now, a line chart, again, shows us the closing price of the indice or the commodity or the currency that we're tracking here, which is what we're doing. And I've gone ahead and I put gold in a gold color out there. Then the center panel is the U.S. dollar index. So I've made it green because of the greenback. And then, of course, I've gotten a little cute here. And then for the Japanese yen, I've gone ahead and I've made that a red color. I was going to do red, white, and blue, but that didn't make a whole lot of sense to me. So we've got green, we've got gold, green, and red out here. Now, there's no question because of the weighting inside of the U.S. dollar index. You know, again, the Japanese yen about 13.6%. It's going to influence the currency pair. But if you really pay attention to this, you're going to see that it really is, and I think it might have been Dano in the den or one of the guys in the den that was really harping on this for months and months and months. And the reality is he or she was absolutely correct on that. If we really take a look at the price movements between the bottom panel and the top panel out here, you're going to see that it correlates much, much better, much nicer out there. So for those of you that are trading either silver or gold, and which also could mean you're trading the equities out here, the mining equities, because of the way that they correlate and move with each other. What you really want to do, and if you take it to the point of June 23rd, on June 23rd might have been, who knows, might have been a a Janet Yellen moment or something like that, a Fed release or who knows what. But what you can see here is you can see the U.S. dollar index so went careening to the downside. Maybe it was Mario Draghi. Who knows what it was? When we go back and we take a look at charts and we look at these patterns out here, at least myself, I can't remember exactly what happened way back when. We're just taking a look at the patterns that are out there. We're taking a look at wide-ranging bars, things of that sort. But you'll notice that the U.S. dollar index went and moved lower. Gold moved higher. So did the Japanese yen out here. So, is it going to be exact? It's not going to be exact, but it is so close out here with regard to the correlations that I would suggest to you that you want to take a look at that. And then if you were trading Treasury bonds out here, I would say, my goodness, make sure that you have the Japanese yen. I use the Japanese yen futures. That way I don't have to inverse or which I'm going to use for the base currency pair when I take a look at the Japanese yen versus the U.S. dollar and Japanese yen out here. Just use the futures contract, plus in my case, the futures contract. I've got accurate data up to the minute, whereas on the currency pair, I've got a 10 or 15-minute delay. So I don't like to be delayed out here. But make sure that you are paying attention to that currency pair if you're trading gold and silver, and that currency pair, that futures contract, if you are trading the treasuries out here. Not to get you confused, but you certainly like to see synergy, and you like to be paying attention to patterns that are out there. Because if you were to ask me who's controlling what, I will tell you it's the currency pair. So you're looking for any patterns inside that currency pair to complete, and that would hold true with regard to Treasury bond futures as well. Okay, so hopefully that takes care of that. If I take a look at just out of the curiosity out here, is this retracement that we're seeing anything more than a retracement at this stage? And at the moment, we don't have any reason to believe that it's nothing more than just a normal natural retracement out here. Now, the chart that we're taking a look at happens to be the Russell 2000 versus the 1000. That is the top portion of my chart. We know that the market does better when the 2000 outperforms 1000. That would be the blue line moving higher. But what we can also see is we can see a nice little rising price channel that it is trading in. So perhaps we get a pullback inside the market all the way down until that ratio gets down to the bottom of that rising price channel. That may also go ahead and coincide with the IWM getting back to the bottom of its price channel as well. Right at this stage here, the reason why we can't call it anything more than just a normal retracement, if we take a look at this chart sort of says it all. Take a look at the breakouts that we have. Now, maybe these are all false breakouts. We're going to find out soon enough. But the upper left-hand panel of my chart happens to be the Dow. And right now, price basically is just coming back and testing the breakout area. When you see something break out of a consolidation, quite frankly, bullish or bearish, you want to see price come back and test that area. If you're bearish and it's a breakout to the upside, you want to see price come back, test that area, and get back inside the lower part of that range. Is it in the lower part of the range right now? No. Are we going to worry about, to the penny? No, we're not going to. If we take a look at the S&P 500, that's on the right-hand side of my screen out here. It hasn't even made it back to the lower part of its range. So it is still a real breakout inside of the S&P 500. We really can't call it anything but that. And if we take a look at the NDX 100, that has now broken out above its consolidation pattern price today, this week, pulling back and testing it. So how the market closes on Friday, will be very important. And inside the Russell 2000, what do we know? We know that it too has broken a descending price channel, descending trend line out here. So everything still intermediate term, doesn't look too bad, but it's still very early in the week. It's only 1:48 on Tuesday afternoon. How this closes at the end of the week will provide you and I with a bunch of information. And it's really important because we're really at a tipping point. Not talking about 1:48 in the afternoon, but we're very close to a tipping point for these markets to either take off topside or take off to the downside. And to the downside, that could easily be moving all the way back to the lows that were formed back here, back on June 27th, maybe even before that. So we're really at these critical levels. Again, you and I have taken a look at, hey, what's going on the charts today? What patterns do we need to pay attention to? I think I've given you plenty of information so that you can anticipate what the markets are going to do. Now, that's the beauty of Japanese candlesticks, is that when they is when they form and when they are forming at pattern completions. That is when it gives you the most information. Look, when I start, I'm no different than you. You know, if you're listening in to this show, chances are you two are either extraordinary chartists and you're looking for a piece of information to just add to your arsenal, or maybe you're just brand new. But each of us were brand new at one point in time. Each of us were attracted into wanting to understand the most fundamental aspect of what's going on between buyers and sellers, and that's what are the chart patterns that are out there. And I got sucked into it in a good way. It wasn't sucked into it. I wanted to eat and breathe and sleep. That's why I do what I do out here. And as I read all the books, as you have, and you tried to put things together, was always, well, what are they missing here? Whether it was Steve Nissen's book, whether it was Larry Pesaventa's book, whether it was Tom, doesn't matter whose book you read out there. It's what else is it that is out here? And when you combine these great tools that each of these individuals have, and you combine them with the Japanese candlesticks, you're going to have a set of patterns that will just simply unleash the power within you. So come on over to the homepage at TFNN.com. Sign up for my workshop. It's $49. You're getting the newsletter service for the next 30 days, and I promise you will enjoy this workshop. It's going to be a great workshop. Don't trust me. Just do it. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. If we go back to our 10-minute correlation chart out here, we can see starting from the right-hand side, so we'll read from right to left, we've got the Japanese yen. It's been pulling back over the last 30 minutes. We can see that so too have the Treasury bonds out here. In the case of the Treasury bonds, are moving back to a level of support. Watch 172.1 out there. On it, we can see light sweet crude has pretty much just been bouncing around here at the lows. We can see the same thing basically unfolding inside the NQ as well as the ES Mini. Now, that's on the 10-minute basis. If we go back and take a look at the 30-minute chart here for the ES Mini, while we were on the air coming into that 1:30 time frame, we had price move lower and we had a nice little hammer candle that formed out here. So that says that low is very important, 21.40.50. Now, this is going to be a little counterintuitive for you that are bears out here. The best case, the best thing, if you're bearish, you actually want to see the market bounce. You would like to see that VIX index somehow relieve that energy and pull back a bit out here. You don't want to see a 10% one-day rate of change or greater than that. So you'd like to see the market bounce. Right now, the market is giving you a signal that that's what it wants to do. Now, the question is going to be, can the ES Mini get above 21? The first place where it's going to run into resistance is 21.47. It's only 3 points higher than where it's trading right now, but that will become the first level of resistance. You get above that, then the 21.52 area becomes the next level of resistance, then 21.56. But you get above 21.52, and it is a move to the upside. Now, does this hammer candle here have to work? Does it have to act as support? And the answer is it should, but does it have to? No. Even if price moves lower, as long as it's doing it with less relative energy out there, it's just going to extend the pattern that we're taking a look at, and you'd be looking for the next bullish signal, the next bullish candlestick that would form out here. Right now, as we speak, with the 3.5 minutes or so to go in this trading session, ideally, you'd like to see a push higher during the next 3 minutes, just a tad higher. The reason is you like to see follow through when you see any type of bullish or bearish reversal candle form out here. So we see the makings, at least inside of the ES Mini, of a market that is trying to find some legs out here. Let me quickly see. You've got a hammer candle as well inside of the NQ. So here's your 30-minute NQ chart. It too forming an A to B equals CD to the downside. Really a 1 to 2. You can see a nice little hammer candle. In fact, a very large hammer candle that formed there. So we've talked about the numbers to pay attention to on the daily chart for the NQ. And really, if this market is going to find its legs, right? We could say it's all about the NQ, but now you really know the trade secrets. It's really all going to be, hey, what's the Japanese yen going to do? What then are Treasury bonds going to do? How about light sweet crude? Because that's going to be some components that will go into that fuel inside of the fire for the ES Mini and the NQ. If I take a look at the Dow futures contract, did it form a bullish reversal signal? And it did not. So the weak link still continuing to show part of its weak links out here. It is in wave 6, so it might just be a wave 7 that turns it on out here. So as we speak right now, no reversal signal here. Looks like there was one inside of the Russell 2000 on its 30-minute contract. Again, this is intraday stuff that we're looking at. It too formed a hammer candle at about the 1 to 1.618, maybe a little bit lower. A to B equals CD to the downside. So, folks, it's been great to be with you on Terrific Tuesday, but you know what that means. That means we've got a terrific lineup of guests for the rest of the afternoon. Guest host. We're talking about our resident polar bear, Mr. David White. And then after David, you've got the Tom O'Brien Show from 3 to 5, and, of course, Andy Heck to take it on home. So, folks, have a great Tuesday, and we'll see you on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.